Why the crypto market is crashing. Over the past 6 weeks, the crypto market has lost an astonishing $1 trillion, shocking even the industry's most loyal believers and driving away many new investors. Bitcoin, the leading indicator for the entire sector, has plunged sharply since early October, after reaching its all-time high of $126,000. By Friday, Bitcoin dropped below $81,000, before slightly rebounding over the weekend. On Monday, while the broader stock market rallied, Bitcoin climbed back above $88,000, gaining nearly 2% in 24 hours, a reminder that crypto trades 24/7. Despite this slight recovery, analysts say it's shaping up to be one of the worst months in crypto history, and there's still no clear sign that the market has reached its bottom. Analysts at Deutsche Bank say it's still unclear whether Bitcoin will stabilize after this correction. Unlike previous crashes driven mostly by retail speculation, this year's downturn is happening amid heavy institutional involvement, new policy shifts, and major global macro pressures. Even though crypto often moves in line with the stock market, this time the pain runs deeper. Bitcoin has officially entered a bear market, down 30% from its recent peak, while the S&P 500 has fallen only 3%. It's on track to have its worst month since the 2022 crypto winter that ended with the collapse of FTX. Two major fears are shaking both stocks and crypto: uncertainty over the Federal Reserve's next rate cut, and growing worries that the AI boom might be a bubble ready to burst. Crypto is especially sensitive to interest rates because higher borrowing costs quickly drain investor appetite for risk, just like what happens with tech stocks. But crypto traders are also still shaken by the October 10 flash crash, triggered after President Donald Trump reignited his trade war with China. Panic selling and automatic liquidations swept through the highly leveraged crypto market, erasing $19 billion in just one day. Many investors bailed out entirely, leaving Bitcoin and other tokens even more vulnerable to sharp price swings. The flash crash forced many investors to sell their crypto to meet margin calls, creating a snowball effect. As Bitcoin's price dropped, more investors were hit with margin calls, leading to even more selling across the market. What sets this crash apart is the massive amount of money that entered crypto through spot Bitcoin ETFs, approved by U.S. regulators last year. These mainstream investors joined the rally on the way up, but they don't share the same long-term conviction as early crypto believers, who usually buy the dip and support each other through online communities. According to Steve Sosnick, chief strategist at Interactive Brokers, Bitcoin has now become a mainstream asset. And because Bitcoin is for normies now, he says, regular investors will treat it like any other high-risk, speculative investment, not a revolutionary ideology.